Hey everyone, and welcome back to the Rate of Return podcast, a 30-minute podcast whose entire purpose is to equip you with the tools and resources to become the best financial version of yourself. From investing in the stock market or real estate to cleaning up your personal finances, putting you on track to become a millionaire, the Rate of Return podcast exists to give you actionable insights you can work toward today. Joining me is the co-founder of Sparrow, Harrison Hochman. Harrison obtained his bachelor's and master's degree at Stanford University. While at Stanford, he served as an operations analyst for the Minnesota Vikings football team, an analyst for various VCs, and finally as an analyst for Evercore's investment banking division before starting Sparrow alongside Daniel. In 2020, Harrison and his friend Daniel founded Sparrow, a company aiming to modernize student loan infrastructure. Think of Sparrow as a marketplace for student loan financing. If you're looking for an undergraduate loan, a graduate loan, an international student loan, or to simply refinance your existing loans at a better rate, Sparrow will equip you with everything you need to do that. Harrison, thank you for joining us.
Thank you, Austin, for having me.
Absolutely. So before we jump into things, I was reading your website, right, as one does before you conduct a podcast, and something at the bottom was the mission statement. To me, it was really powerful reading through it, and I think before we jump into this, I want to make sure that people who are listening can really understand what you guys are trying to build. So if you don't mind, I'm going to read your mission statement. We believe in the American dream. We believe that anyone, regardless of where they were born or what class they were born into, can attain their own version of success in a society in which upward mobility is possible for everyone. Achieving that dream is impossible without education. Education inspires, encourages, and empowers. But today, the price of that education is a non-starter for the majority of students. We believe that there ought to be another way, a world in which education is accessible and affordable for all. At the core of this vision is a financial engine, which helps borrowers find affordable financing. An engine that simplifies the lending process, provides maximum liquidity, and personalizes services to each borrower. That engine is Sparrow. Man, I'm not saying I'm getting chills right now, but that's poetic, right? Harrison, take some time here to introduce Sparrow in your own words and maybe kind of clear out some misconceptions between what you guys might be compared to as like a SoFi or a Common Bond or something like that.
Yeah, sure. And very excited for this. Thank you for having me. So the way that I like to describe Sparrow and what we're up to is much like Expedia, and the analogy translates into travel. So, when you're trying to go from Los Angeles to New York, you don't go to JetBlue, Southwest, United, Delta individually. You go to an aggregator, punch in your dates, your destination, and your arrival, and they automate that search process for you. You go to Google Flights, Kayak, or Expedia. The same process today doesn't exist in student lending, specifically private student lending. If you wanted to find the best private student loan, where would you turn to? You'd probably Google best student loans 2021. Maybe you'd see a page with arbitrary star ratings like 4.5 out of 5 stars, and it's non-informative and non-personal. So if you wanted to see the individual rate at each of these lenders that has been presented to you as being 4.6 stars, you're going to have to submit an individual application at each lender. Now, that application process is wildly inefficient, so much so that it disincentivizes borrowers from exhaustively searching the market out there. It takes too much time to find the most affordable offer. And so borrowers, students, young adults, jump at the first offer that they pre-qualify at. So we questioned why the same level of aggregator automation that exists in travel doesn't exist in private student lending. It didn't, and so we built that. So Sparrow, much like Expedia, automates the search process for private student loans, where a borrower can submit a single application, and then we'll go out to the lenders that we partner with and actually underwrite that loan on behalf of these lenders and return back real pre-qualified offers to the borrower and help them go through the process in picking them. And to your question of us versus Common Bond or us versus SoFi, we're partners with Common Bond. We're partners with SoFi. So
Okay.
we're a marketplace. They're the lender. And you can think of us as the middleman, where, if you wanted to get an offer from SoFi or get an offer from Common Bond, usually you would submit an application at each. But if you wanted to efficiently compare both of those lenders, you'd come to Sparrow and we'd automate that search process for you.
Got it. Okay, sweet. So what I'm hearing is the next time I want to fly to Tampa, Florida, and I go to Google Flights and it shows me all the different airlines for that same one task, you guys are that Google Flights at Expedia, that sort of marketplace to aggregate all of these different sort of opportunities that someone who wants to further their education, get student loans for, right? Across all the different lenders. You guys are those aggregators.
Totally. That's exactly it. And the things that I like to boil the system down to as to what we're providing borrowers. The first of which is the affordability. So in that mission statement that you read, the fun fact about the business, we started the business as students. We were
Mm,
undergraduates. It was the turn of COVID. Private student lending ballooned because families' expected contribution didn't change, but COVID affected their income and it dropped. And so that new gap that was formed, private student lending was expected to fill. And we watched as our friends went through this incredibly arduous and manual process of trying to find the best private student loan, only to recognize how unbelievably 1980s it was.
mhm.
We knew that there had to be a better way. And so that financial engine ended up becoming Sparrow.
I love it. No, that's like what's his name? Kevin O'Leary. There's got to be a better way, right? Like you see on Shark Tank. I love it. You guys identified that better way and are executing upon it. So let's talk about that, right? Something that I think is really interesting that you guys are doing is you're not only connecting borrowers with lenders, but you're also teaching and encouraging borrowers to pay off their student loans as quickly as possible. For example, step 5 under the student debt management section of your website states by making a $3 payment per week, you'll save $1,350 as well as 5 months, not 55, 5 months of debt payment. So is Sparrow this like company who's also trying to address the before, middle, after? I mean, you guys are really in the whole life cycle of the student loan kind of life, right? So what is the master plan for Sparrow if it's not just becoming this sort of marketplace between borrowers and lenders, but also helping them pay it off? Like what's the jive here?
Yeah, sure. So we like to think of student lending as two unique steps. The first of which is borrowing that loan, and the second is paying it back. And so we spent from founding date until day, nailing the how to borrow and borrow efficiently. And we're bringing that same mentality to the repayment sector. So
Mm,
there's many ways that borrowers, for lack of financial literacy, don't understand effective means of debt management. And this can be, given the size of student debt and the average term at which borrowers are expected to pay back, it can be a huge drag on someone's life for up to 2 decades if they're not adequately and efficiently managing their student loans. And so the example that you just gave is, I'll mention it's an example. So it depends on loan size and APR and term. But we're helping borrowers recognize when there are opportunities to make small incremental payments on their loans to result in real long-term savings. It's very hard for the average borrower to get their head around that. Our minds
mhm.
like to think linearly, but student loans compound exponentially. Usually, that exponential compounding is used against you. We want to use that same powerful force for
Mm.
borrowers, but use technology to automate that.
Got it. Got it. Yeah, no, I mean, student loans are like just absolutely crippling. I'm sure a lot of people listening know, I've got student loans myself, right? I wasn't Christian Blackwell. He is a rock star and completely was able to get a bunch of scholarships and stuff, but not everyone is smart or athletic, right? And so we have to take on student loan debt, and it's a lot. It's a lot. And it seems like you guys are trying to build, you mentioned this two-step process, right? You guys are both innovating on the borrowing side and this repayment side. And that's powerful. That's incredibly powerful. You've announced some, incredibly powerful partnerships, right? Sally Mae, Earnest, and Common Bond, SoFi. US News and World Report awarded you with the best marketplace for comparing personalized student loan offers side by side in 2021. Like that was your title. Like that was, I mean, U.S. News. Like that's insane, right? What innovations are you working on and building that will allow Sparrow to remain this best in class marketplace, this best in class, just 5-star rated, product?
Sure. So the first thing is financial literacy. financial literacy is a huge component of what we do, especially on the search side. We see that borrowers, oftentimes students, 19-year-olds, they'll go out and, for better or for worse, like we mentioned, they'll jump at that first offer, but they won't understand the terms that they've borrowed at. It's not
Mm.
uncommon for someone to graduate and say, I don't even know if my debt is from Uncle Sam in the Department of Education or from some private lender like Sally Mae, let alone to say, oh, I know exactly that my rate, across my 6 loans, I have a 4% rate on a fixed APR and a 5% rate on a variable APR. People don't understand this. And,
Yeah,
and,
yeah.
and there's good reason for that. So what we
Confusing,
see are,
absolutely.
yeah, super confusing. What we see ourselves is as being that custodian. We want to be the trusted shepherd. We're building from the borrower's perspective. I myself, I'm 23 years old. I'm very aware of what a 23-year-old may think and not know. We're basically building a product for our friends. And along the way, we're implementing a handful of um, tools and features that will enhance the financial literacy of borrowers as they're finding their loan and taking it out. And then on the flip side, the same thing is true on the repayment experience. So we provide the tools to help borrowers effectively manage their loans. We also provide access to information that they usually wouldn't see. And so, there's a handful of ways that this manifests itself into the product that we provide to borrowers. But the overall theme is, let's make someone financially literate so that when they do make one of the largest financial decisions of their lives, maybe minus a mortgage, they know what they're getting themselves into.
I love that. Isn't that wild to me? I mean, it's wild to me. I don't know about you, but isn't it crazy that someone can go into tens of thousands, if not hundreds of thousands of dollars in debt before the age of 22? Right. It makes absolutely no sense. It's very noble what you guys are doing to try and, not just on the transparency side for borrowers and lenders, but then also on the, just, on the other side of the aisle, as it relates to helping people pay this money back in the most effective way possible, to hopefully save themselves tens of thousands of dollars, potentially, right. And maybe even years of debt at at the end of it. So, no, that's incredible, man. And I love it. uh, every episode of the Rate of Return podcast, we sort of do this halftime, this little intermission. We call it mailbox money. As you know, I've got a Substack with thousands and thousands, and I think we're closing on 6,000 email readers right now. And I talk about personal finance and investing over there. But before I film these podcasts with my guests, I ask my people, right, like, what questions do you have for these budding CEOs of awesome startups, right? I want to be this awesome inter kind of like bridge, right, between people who are curious, as well as people who maybe are starting their own company, or people who are battling student loan repayments, like right. So I got a couple questions for you, Harrison. The first one is from Steven out of Oklahoma. Steven asks, what is the most common mistake you guys are seeing with people applying for student loans in the current system?
First off, great question. The most common mistake that we see, I would probably say it is not understanding the difference of repayment plans for both federal and private student loans. To explain what this means, it's really hard to conceptualize that, you're presented, usually a lender will present you with an offer of 15 pre-qualified offers. And there's
Mm-hmm.
one on an 8-year term and a 15-year term and a 20-year term. Now, when you're looking at those offers, how do you do an apples to apples comparison? That's even true, by the way, of federal student loans when you're trying to pick a repayment plan. How do you know which repayment plan will map it out for you so that you can position yourself for financial success and affordability? It's incredibly difficult math to do, to actually truly understand the total cost of one loan versus another, or how the monthly cost varies depending on the loan plan that you select. And so we see that borrowers oftentimes optimize for variables they otherwise wouldn't have selected for had they truly understood what they mean. And so,
Mm.
how we think about trying to steer borrowers in the right direction is, using technology to automate those calculations so they don't have to do it themselves, presenting it in a very visual and digestible manner. There's a handful of tools and tricks that we do, but overall, I would say that the most common misunderstanding is trying to select the right repayment plan.
Got it. Got it. Next question is from Claire out of Chicago. This one's actually something that I can resonate with myself because I was in Claire's shoes when I was going through the student loan process. But Claire says, am I screwed if I'm going into college and the whole loan process with already bad credit?
No, you're not. So the one thing to understand about that is your credit is not looked at when you're qualified for a federal loan. Federal loans are need based, not credit based. And so that's why a lot of borrowers end up that, and plus the benefits that come on the back half when you need to pay your loan back with all the forbearance policies and the protections is a large reason why borrowers opt toward federal loans. And so depending on the amount of loans you need to take out for school, you're not screwed if you have bad credit for federal loans. As for private loans, you're not excluded from the private lending system. So there are a handful of lenders out there that will lend to students with even no credit at all, no credit score, no credit history, no assumption of a cosigner, and even no income. How do you find those lenders? It's usually pretty difficult. It's one of the value props of the business is we help you find those lenders without having to do the search yourself. But from a high level, I would say it's a common position that you should be aware of. You shouldn't be too worried about, but make sure that you take active steps to realize the financial products that you're borrowing.
That's a really good answer. That was great. For me personally, my circumstance was, I didn't have credit, but I was a customer at a local credit union, Eastman Credit Union, ECU, over in Kingsport, and they underwrote my loan. They, I was, been a customer for them for a long time, and so I was able to leverage that relationship. But not everyone is so lucky to do that. So I appreciate all the additional color there. Last question comes from Tyree out of Dallas. Tyree asks, can you talk about the difference between private student loans and federal student loans? Government has me tripped up over the last couple of years and not sure what I want to do with my federal student loans.
Sure. A fantastic question. And I think the government has probably the 45 million Americans that are paying back student loans tripped up as well. So I would say this particular person is probably looking at whether or not they should refinance their federal student loans. The first consideration when refinancing your student loans is to recognize that if you do that, you're doing that with a private lender. And private lenders don't provide the same repayment benefits that the federal government does. For example, it's very rare for a private lender to allow for forbearance. So if you need to push off payments because you came into some cycle and maybe you got fired or you got laid off, you can't usually with private lenders, you can't put your loans into forbearance, meaning you stop making payments while interest just accrues. You can with certain exceptions on federal loans. So consideration number one is just know that you're giving up those benefits. Then consideration number two is before you make any decision to refinance your federal loans with private loans, check your rates. Know how much you're going to save if you go with a private option versus a federal option. Only you can truly determine how much that's worth to you if it's a few $1,000s, but have the information before you make the decision. And then finally, step three, after you've done all of that due diligence and it's time for you to go ahead and try and refi your loan, this is where Sparrow comes in. So to check your rates, we help you find that. And then also to find the most affordable option at the point in time, we'll do it for you very efficiently.
Why are you such a well-spoken young man? I swear. I love it, man. Your answers are so spot on. It's like 1, 2, 3. Here's how we do it. I love it, dude.
Appreciate
Maybe
it.
you should be hosting the podcast. Jeez. Okay. Up next, right, is I want to talk about Robinhood. Funny enough, Robinhood's first acquisition was a media company, which they transformed into their Robinhood Snacks brand. I noticed Sparrow, you guys are publishing your own sort of blogs, newsletters, things of that nature. Where do you see this intersection between media and finance headed, and how are you positioning Sparrow to benefit from this sort of convergence?
Hmm. Media and finance, I think, have a tremendous amount of potential with financial literacy. Media truly understands how to make content digestible, understandable, and bite-sized. Finance by nature is confusing, overwhelming, involves jargon and acronyms, and no one really understands what any of this means. And so a cross section of the two could produce something that I think Robinhood has done a tremendous job at, which is quick newsletter, very understandable. It's informative, and it's not something that feels like a burden. that you're going out there and putting yourself to the trudges to read this thing because you think it'll benefit you when you turn 36.
Hmm.
It is enjoyable to look at and to go through. And so I think we're trying to position ourselves in the same way. A lot of the articles that we put out are put out by borrowers who are younger and who are actually currently paying down their debt. It's one thing to do an armchair exercise where you sit back and theorize about the value and the intricacies and the complexities of student loans when you're 45 years removed from the process trying to look back. And it's another thing when you're living it day to day and speaking to other people living it day to day. We tend to err on that latter side. We want people with lived experience to share that experience. And so when we think about the intersection of media and finance, we're trying to find people who are preaching their own story and not some theory of a story they made up.
That is powerful. I had no idea that was the case.
Yeah, yeah, and you know, a quick little plug: if anybody is interested and wants to join the team in that regard and finds a passion in that intersection, we're always hiring.
I love it. I love it. Last question here, formal question that I prepared is, I noticed at the very bottom of your website is a button titled Employers, right? I personally published a TikTok a few months back detailing the top 20 employers in the US who are actively paying off their employees' student loans. Do you think that this is a benefit the millennial and Gen Z generations specifically will demand in the coming years? Have you seen traction on this business segment? Like, what kind of feedback are you getting from employers, employees, everybody? What's the scoop?
Sure. Um, this plays this benefit. It plays into a much larger macro theme, which is financial wellness.
Hmm.
So
Hmm.
employees are starting to look to their employers not just for a steady paycheck and for medical benefits, but for overall financial wellness. And they want them to be that source of truth. Undeniably, student loans are a part of that equation. 45 million Americans, as I mentioned, paying it back. They're paying down 1.7 trillion in debt. It's the second largest consumer credit industry in the United States. To put that into consideration and context, if student loans were the GDP of a nation in and of itself, it would be the 11th largest nation in the world. So it's a behemoth to address, and employees are looking to their employers to help them do so.
Hmm.
I think it will definitely become a trend in trying to have some assistance from your employer to help you navigate the complex process of student lending. Not to mention, student loans are particular, and this is up for the courts to decide and recently has been contested, but as it stands right now, they're one of the only forms of non-forgivable debt in bankruptcy.
Yep.
And
Yep.
so if you
Yep.
don't pay down your debt, you're taking it to the grave. And the average term on these loans is 21 years. So you can imagine a borrower who's looking at that saying, I'm going to be in this journey for at least 20 years. I need some help. And that help
Mhm.
usually is going to come from a forward thinking employer.
And you guys have seen positive feedback, I'd assume, from a lot of employers saying, "Hey, this is a good idea. We do want to help our employees, take their finances by the reins and really, be there for them as they tackle student loan debt or obviously 401ks are part of that financial well-being." And I'm assuming you've seen that kind of feedback.
Yeah, definitely. There have been a handful of companies that are incredibly forward thinking with this. All the kudos go to them, and they've taken the lead on showing what a forward thinking organization can be and the
Hmm.
material benefits they can drive for their employee base. And the argument is not just one of altruism, but it materially leads to differences in retention for employers. This is a fantastic benefit, especially for young adults paying down their debt. In
Hmm.
attraction, it sets you apart in an incredibly competitive job market. And so there are two sides to this coin, but we have seen a terrific aptitude in the markets of forward-thinking employers that are looking to provide something differentiated from what their comps are not doing.
I love it. I love it. Well, as we sign off here, I always have a little sign off question I ask my guests. This is a question we ask everybody, and I'm excited to hear what you have to say. So in 12 months from now, what do you think people are going to be referring to when they say to themselves, "Oh, how did I miss this trend? It was so obvious," right? What is that trend happening right now that is so obvious that people just aren't paying enough attention to?
Hmm. I got to commend it. Another great question. I would say that trend will likely be in student loans. It will be in providing transparency. So if you think about it, if you're listening to this and you're a borrower and you have student loans, try and think to the exact APR that you have across all your various loans. And across those loans, what is your outstanding loan balance? What is your total accrued interest? Of the outstanding loan balance, how much of that is principal? If you can't answer these questions, that's, by the way, you're not alone. Most people can't. But having readily available access to transparency of information is powerful. Because once you have that information, you can take action upon it. You can understand if you should refinance your loan. You can understand what the best refinance options are out there. You can understand how to effectively pay off your debt faster. So transparency to information right now is incredibly difficult. If Sparrow is successful, the reality distortion field that we're trying to impose upon the world is one where the financing of an education is necessary, but it's an afterthought. Your capital, your loan, is found efficiently. It's paid back in an accelerated manner. And all of this is automated for you. But it's powered by transparency of information. And so if I were to say in 12 months' time, I'm looking back and I'm trying to think of one tailwind, that would be it.
I couldn't agree more. I really couldn't agree more. I refinanced my student loans back in, I think it was 2019 for, I saw Common Bond advertising on Morning Brew, and I was paying 9% on my loans. And I was like, whoa, this is crazy. Like, because obviously like this was probably back in 2016, I think, when I originally had to take out the loans, and I was just some random kid. It's like, yeah, we'll just charge them 9%, see what happens. And Common Bond, I think I was able to get around 4 or 5% of the time. But that to me was something I struggled with. It's like, okay, I understand this interest rate. I see this payment now. They kind of broke down a little bit what the difference is between what I had before and what they're offering from a monthly payment perspective, but that was about it, right? So I then had to take the time to build my own Excel model, kind of with principal and interest, trying to figure out exactly how much I'll be paying here, what that timeline looked like. I love that answer. I really do, because as someone who went through that process, even several years ago, it was something that was a major variable for me that I had to navigate as I was going through that. So it's a great answer, Harrison.
Thank you.
But before we sign off here, and you did a little bit earlier, I'd love for you to do some more now. Where can folks find more about Sparrow, what you guys are building, what you're up to, anything and everything? Plug yourself away. This is that time.
I appreciate that. So if you want to check out Sparrow and Sparrow's services, first place to turn is www.sparrowfi. That's F as in Frank, as I as in island, sparrowfi.com. That's where we host everything. It's our website, and signing up for an account is free. Our services are free and always will be. On socials, we're simply just, I believe, sparrow.app on TikTok and on Instagram. And as for myself, I don't have social media, contrary to a lot of other 20-something-year-olds, but I have a LinkedIn, and I post actively about student loans and student loan related information. So if you're curious, please feel free to follow.
I love it. Everyone, thanks so much for joining. And I hope to have Harrison back. Dude is an absolute well-spoken rock star who understands this student loan landscape like a wizard. So I look forward to our next episode together, man.
Yeah, thank you, Austin. This has been terrific. Love what you guys are up to at Ready Return, and very excited to prospectively come back, and appreciate you having me.
Absolutely.